hash rate, fuck a banker, so I'ma keep it running. Every hash rate, fuck a banker, so I'ma keep it going.
Solo money Monero. I'm a cypherpunk hero. I don't care about no profit. I don't care about the narrow. Every hash rate, fuck a banker, so I'ma keep it running. Every hash rate, fuck a banker, so I'ma keep it going. Solo money Monero. I'm a cypherpunk hero. I don't care about no profit. I don't care about the narrow. Every hash rate, fuck a banker, so I'ma keep it running. Every hash rate, fuck a banker, so I'ma keep it going. Hold up. What you doing this for? You doing it to get rich? I'm trying to make the bank my bitch. Every hash rate, fuck a bank.
Okay. Hello, everyone. This is our slightly delayed year-end summary / Q4 earnings report and our projections and outlook / forecasting attempt for 2025. So I hope everyone had a good year. Obviously, it is no secret how bearish I was in 22, 3, and slightly less bearish 24, obviously. But again, having a bearish thesis while continuing to mine and accumulate at those lows is not a losing strategy. It's just being macro aware. The data indicated one thing. The markets did another. I guess the mistake was assuming that they wouldn't inflate the problems away rather than allow a natural correction. That was clearly a fatal flaw. I guess the lessons learned from all that is buying and holding in your personal portfolios at such substantial dips is certainly a lesson learned the hard way. Fortunately, we did mine and accumulate the bottom with our hardware that is now pushing 8 quarters old. You know, some a little bit older than that. You're going to have continued new hardware rollouts and continued difficulty increases. Electricity isn't going down in price. So I think, at least for Canadian miners, the carbon tax going up in April again is, as I said in the last video, by far the number one point to note. That's going to be very, very detrimental to the competitive nature of Canada's electricity rates. Hello, TD. Yeah, we're doing okay. When we added all the year-end reports, our other 4 ventures did make us take on some debt. Not a substantial amount, nothing we can't service, obviously, but it has stunted deployment into other areas such as new mining equipment. But that was done by design, and we have purposely retracted the ability for us to deploy into new miners because I'm not convinced that the best hardware to buy is currently available. The directionality of the markets is something that I'm not sure investing in hardware is the best way to go, but that's just what I've looked at and what I've assumed. So I'm not sure on that. But again, we've chased Canadian dollar-based revenue through alternative revenue streams as the strategy going into the second half of 24. And it's worked out pretty good. But 50% of our debt has been paid off. We're working on the other half right now. We are adopting a new strategy in 25, and that is to quarterly sell our accumulated crypto that we don't like, such as, say, Gurion or Nervos and the likes of that. We'll call them, subpar long-term bets. We're going to swap those to make chunkier and heavier positions into projects we do believe in, say Caspa, say Nexa, the blue chips, if you will, or the best funded projects. I was compiling some data on our Kadena ASICs. I tend to be a little bit obsessed over Kadena because of how bumpy of a ride it's been and how sketchy it is and how kind of isolated it is from the rest of the crowd. And I was adding it up. Our mini boxes alone, we've had, a few of them, half of them have broken, half of them are still riding out. I added it up. We've over 3x our money just on the little mini ASIC boxes. So if you had from the first gen KD box running it, holding every single coin, not selling anything, especially had multiple of them, you have theoretically done well. So I thought that was a good anomaly to note because no one's really talking about that. Let's also do that. You're talking about 15 US a day in revenue for a K3 now, $9 in profit a day US. That's outstanding for something that's 2+ years old. That's phenomenal. So we have officially broke even on all our Kadena equipment. No, we have not sold it. And again, the new token creation feature, which we took advantage of, made a Trillion Carbon token of, and is tradable on the DEX. Again, you can message me for any OTC positions on the Caspa token for Trillion, Nexa, or the Kadena one, which is the most infant. But again, so I think Kadena here really could outperform because of the liquidity it possesses, the funding it has. And this goes back to the same thesis that I've been saying for over 2 years, that the projects with the best access to capital are the ones that will survive. And that is Nexa. They don't care about the price. Kadena doesn't care about the price. They keep innovating. They keep experimenting. And that research and development is inevitably going to lead at some point to successful ventures and successful market share overtakes of other projects that are going the other direction. The higher the advertisement budget, the lower the return and survival rate of a chain will be. Yes, the Canadian Prime Minister did resign today. Unfortunately, the damage has been done, and it is far from a problem solved. The amount of cleaning up that has to be done is actually going to be more painful than the attempts to mask his own policies through inflation, through government spending, and whatever. So that's a whole other conversation. But there are other things I noticed. Again, GeoNet continues to float the entire bill of electricity consumption monthly. This is again going on for over a year. This month, we received our second final dividend from them. And again, that was the largest bill or return this month. And this seems to be a recurring pattern. So again, they have a halving every year, but yet it continues to have the same returns, dollar for dollar, which is quite substantial. So again, if we didn't have GeoNet to float our constellation, we would be in serious trouble. So I will continue to be bullish on those miners as a complementary holding to subsidize larger ASIC or electricity hungry machines. Now, another thing that I find absolutely worth noting without a doubt is actually the GPU and CPU combo on Warthog. We've gone from 4,000 a month to like 200-300. And it's still really the only place to designate hash rate. It's simple, it's easy, it doesn't use a lot of electricity, and it chews up a CPU and a GPU. That's a little bit of our hash rate, and the vast majority has actually been on unminable, which leads me to my next point. 25 Avalanche is required to generate a 7 to 9% yield or return. So we have sold various projects that we do not have faith in or do not feel growth will be following it. And we have staked it. We need about 25 to delegate, and 48% of Avalanche's network is fully staked. So that's a big catalyst to the upside. The DMV of California uses them for all their records. Again, that's Hedge Eye's research, not mine. But again, it was very worth noting. And so we went ahead and did that. We have multiple 25 minimum delegations of Avalanche to that. So that's something that's new. And again, these proof of stake networks have the liquidity, they have the attention, they have really a lot of the retail fluctuations, inflows coming towards it. And not very much money has been put towards proof of work. So to have some exposure there is a necessity, really, for the portfolio. So that's what we've done there. Let me take a look here. So we switched our Apollos and ETC miners over to eGas for the month. We have an ungodly amount already, but just figured we switch it over because our yields on Octaspace are just abysmal at this point, and we've definitely got enough of that as well. So really kind of just consolidating and becoming more sustainable, selling our GeoNet to cover the hungry machines for electricity, taking ugly projects from proof of work that we unfortunately already have the equipment for, swapping it into proof of stake networks that can generate a yield, turning the hardware into software into a dividend. And that is something that, again, it's a pretty big pivot for us. We are becoming more active in managing our portfolio because it is gradually increasing in value and in diversification. Our deeper network, again, is making $1 a day. This is 2 years of the same strategy still being the winning one. And unfortunately, I don't have much new news on that front. So, when 5 3080 Ti's with 5 5950Xs on Warthog is generating the same as 3 deeper networks with full gold credit scores, right? I mean, something's off. When, GeoNet is making more than multiple K3 ASICs, something is shifting. There is a vast polar shift in the markets here. It's not worth it to buy a 5090 when it comes out. It's not worth it to buy a 40 when it came out. It's not worth buying last generation. CPUs bring in fuck all. We've had those on Etika for a couple months, some on Kyla Coin, just to, switch it up a little bit. But again, it all comes back to ease of management and sustainability of the projects you're mining. I mean, we've really cut ties with, we were mining over 30. Now we're down to about 20 holdings. And even of those 20, every quarter, those are being swapped, a lot of them. We're building large positions in Nexa. We are building, we are continuing to hold all of our CASPA. There's really, again, these proof of stake projects, when you're getting a 9% yield, you don't have to worry about it. You can sleep at night. There's no DigitalOcean cost. There is no hardware cost. There's no electricity cost. There's no management fee, if you will. Again, Bitcoin Cash, park it and forget it. Kadena, a great ASIC to have. And again, you can get one for like $4,000 US right now. Our GPUs have been switched a lot to Ergo, by the way. That is probably the newest GPU function. So CPUs on Etika and GPUs on Ergo, with a chunk in the middle of, like I said, 5 units. We've reduced it to being on Warthog, just because the hash rate or the difficulty is absurd right now. And really just consolidating. So a lot was sold and put into Avalanche and for the staking mechanism and to Nexo. Bitcoin Cash, as I just stated. Really I'm looking at new ASICs to purchase. FPGAs have vastly underperformed. And I don't want to just go the Rainbow Miner route. I mean, of course, that's certainly an option. It's just thinking more larger yield. And the new Nexa ASIC is already sold out. You can't buy it, at least on the websites I've looked at. And it's, $7,000 US plus shipping, import tax. You're looking at 12, 13 grand Canadian by the time it gets to your door. And it's going to be replaced by the Bitmain ASIC. So when we finish servicing our debt, revenue is generated, all our products have been sold successfully. The Bitmain ASIC for Nexus should be out, and at which point I will most likely acquire one. Another one I'm considering is an Illuvium ASIC. We have room for one more ASIC, but we could probably squeeze two in at our current infrastructure layout. So a Nexa and a Illuvium ASIC at some point could be something worth looking at. But simple, chunkier positions that are all subsidized by GNet. I think that's going to be the winning play for us this year. Our portfolio peaked in December 9th of 2024. Now, since then, it's taken about a $40,000 US hit just from then till now, almost 30 days. So 30 days. And that's after this one's earnings report was added into CoinGecko and what have you in our spreadsheets. So we have taxes coming up. And so we have to worry about that. But again, now our alternative revenue is equaling, whether it's the crypto research product, our new authentication as a service product, clothing sales through the 2 collections we have out now, the Havana collection and the Venetian Carbon collection, our burner sales, and the other pharmaceutical venture we are in. Again, crypto is allowed to be idle in the background as we deal with this, because that revenue subsidizes the crypto entity as a whole. So keeping it simple, keeping it boring, making larger bets with higher conviction is really the only way to go here. The mining game is changing. It is so hard and so competitive that I truly only think ASICs will be the only place I will deploy capital going into the future here, especially for 25. And when you're doing ASICs, I don't want the PDU and all this wiring and worrying about heat when it's cold, the airflow, when you can just have it hosted. And especially with the carbon tax, it's actually cheaper to now go outside the United States where there is no carbon tax. So a hosted ASIC of Illuvium and the big one when Nexa comes out, really seem the only 2 places that seem necessary. And again, we'll have stockpiled cash in our company accounts ready and waiting for that. And no, I'm not going to build GPU rigs and CPU rigs and all this shit. There's no point. There's no new coins down the pipeline that are worth mining and accumulating or buying hardware for. I think those days are behind us. The innovation curve is a disgrace. There's nothing good coming out anymore. There's nothing. Yeah, solar is definitely a thing, but in Canada, you got the snow, you got the cold. It doesn't, the sun isn't always shining. So, whether it is Coastal Crypto or Hawks hosting, that's really the only big thing. I'm just not sure. And our equipment is certainly starting to age. 3080 Ti's compared to 4090s. I mean, you're getting half the Nexo. And now the ASIC out. So now it's pretty much finished. 18 cents. Holy. Yeah, we're at about 10 or 11 US equivalent right now. And we used to pay 8. So over the last 2-3 years, that has just fundamentally changed my outlook. Now we're racing against not only the obsolescence of our equipment, not only competing with everyone else for what to mine and what to accumulate, but also we have the highest corporate tax rate in Canada. On top of that, the carbon tax is creeping up behind us every single year. So max this year and next year, before all this equipment has got to be moved or sold or break, hopefully. So that's the real transition, is going from hardware into software. By that, I mean transition from harvesting and mining and drilling for the digital oil to storing the digital oil and generating yield on that oil. Whether it's staking, whether it's actively trading, and that's just going to be the way it goes, unfortunately. I'm going to keep mining. I'm just saying it's going to be offshore hosted ASICs. With really expensive machines, prepaid electricity rates through all the contracts on an annual basis. That's going to be, it's larger and larger subsidies required to mine an ever decreasing amount of good projects. Sorry, that might not be the news everyone wants to hear, but again, I'm not sponsored by Keller. I don't have a mining shed that I need to show everyone. There's no scams here. We are just a participant in the market like everyone else. I'd love to know everyone else's situation. If anyone wants to come on, feel free to do so. Again, the Discord is there. And that's why I'm focusing on building the Trillion Carbon token utilization. So we have the listings, we have the triple networks, right? Kadena, Nexa, Kaspa. Now this authentication as a service, we are in talks with a clothing brand actually right now. Hopefully I can get the deal ratified by tomorrow or the end of this week at the latest, with our corporate attorneys sealing the deal on that, and whether it's exclusivity rights or whatever, what have you, and authenticating this clothing brand through the Trillion Carbon network. I think utilizing everything we've learned over the past few years and monetizing that in a corporate setting in some degree, I think is really the ultimate way to ensure solvency going forward. Because there's no shortage of blockchains. There's a shortage of good ones, shortage of mineable ones. And there's a shortage of people building on these chains. So, was it 3,000 some odd developers globally on blockchain, and that's it. I mean, a small fraction of that is on proof of work. So to build on proof of work in any way, shape, or form is really what the proof of work networks need. 3 gigahash at 1,800 watts. I mean, that's such a low barrier for Bitmain to breach with Dragon Ball's ASIC for Nexo. I mean, it's going to happen in the next few months. It could be a repeat of Kadena, where every other ASIC got bricked. Bitmain comes out and that's it. And that's what I'm waiting for. It's barely probably only making like $2-3 a day for 10 grand. Damn, that's not even. And again, everyone knows that we accumulate and hold everything we do. Again, projects like Wingbits, they're getting investments from GeoNet. GeoNet's getting investment from its customers, from Van Eck, from other investment firms. So if we're just following the money here, it's not hard to realize that things are changing. We don't know what, but you better have a chip at each interval to capture some of that upside in each sector in order to survive. The Crank token seems to have bottomed because of their incentives for the doubling, almost like a GeoNet. They do these incentives at the bottom at the worst time to stop the bleeding, and it instantly did, and boom. With 300, so we used the revenue from one of our Kadena monthly revenue to swap into the 308 Kadena required for the staking, for the doubling of rewards of our Crank units. Now, we've been mining Crank since you had to call Peter personally and email him, and he would ship you a device. We still have fuck all dollar-wise. And we were literally one of the first ones. And that is 90% plus of Kadena's network usage. I mean, pretending anyone knows where this goes is out of their mind. But again, we continue to roll the dice. Probabilities increase exponentially with money. What was that about GeoNet? Well, GeoNet has vast investments from Van Eck Investments and other investment institutional firms backing it. They have then taken that capital, grow their network. They have the burning mechanism. So that's obviously good. Now, I will remind you that the team unlocks come out this year. A fairly sizable portion on the Trillion Discord. I do have that chart posted. That's something to be mindful of going into 25. I don't think they're stupid enough to pull the pin on that grenade, though. You would be crazy. Probably offloading it at a discount to current market price in the OTC market to other institutional investors like the ones I was just talking about. And GeoNet invested $3.5 million into Wingbits. So Wingbits was a natural progression and fit to roll over some capital into. Again, we are pioneers, which in Wingbits, which means we are one of the first 20, and we had 3 of them. We have a total of 4, not quite a constellation, but a pretty sizable network of those devices. And the yields have gone down substantially, that even though it's still in testnet. But with GeoNet's backing, you can guarantee it's been vetted, and institutions have also taken notice of it. And it's certainly worth putting your money into. Again, I've said this for 2+ fucking years. If you're going to have an ASIC or 2 or 3 ASICs and a GPU rig and CPU rigs and all this shit in one cubicle, 1 square footage area, subsidize it, diversify it with the antenna shit. GeoNet and Onikoi, a WeatherXM. WeatherXM made more than 5 GPU and CPUs on Janus Hash on Warthog this month. I mean, you got to be kidding me. When you're talking about profitability, WeatherXM just outperformed really the only project everyone's piling into right now for hash rate. But no one's going to talk about that because they don't actually play the whole field. They sit there, I'm a CPU guy. I'm a GPU guy. I get sponsored by other fuckheads. They're not actual participants with their own money. Pass the hat for a worthy cause to keep them going. I think not. So when a fucking weather device costs $1,000 Canadian is outperforming a 3080 Ti to 5950X. Again, that's an anomaly worth noting. So again, having that and a GeoNet and a Crank and a Wingbits all on an antenna outside would cover all the electricity for a 3200 watt ASIC, a 6-card GPU rig, and a couple CPU rigs, whatever format or blend you want to put together, the antennas will subsidize it. You have to think outside the box here. And this is just like stocks. How many people have, what's it called? MSTR. Oh, God. People have MSTR and NVIDIA as 50% of their portfolio, or these 0 days to expiration options. Holding Tesla stock. Who is still holding Tesla stock? Okay, these are the same people who are, quote, mining for daily profits. How's that been going? Idiots. So different strategies will have different results. Of course, Virus been a massive winner to those who understood its complexities and were there previous cycles before. But again, people don't talk about these things, and congratulations to those winners who did that, because that was one of the biggest winners. So, CPUs are where the really smart guys are. But even they're having a hard time, aren't they? GPUs are finished. They're done. FPGAs. Oh, they were outperforming great. And now they're just sitting there, banging on a solo block. Dynamics are changing. And now with the war on crypto being ended, there's nothing going on. There's 25 different structured products to be released this year in an exchange traded product format, so an ETF style. There'll be an Avalanche one, a Solana one, et cetera, et cetera, et cetera. What I've been trying to do is orchestrate some type of rollout or IPO, whatever, of a proof of work basket ETF. I've been working on that for a few months, and we're going to see if I am able to have that constructed and rolled out. I think that is really going to be the saving grace. But again, the money is not flowing. The innovation curve has peaked, and it is on the decline. And it's only getting more expensive to mine some of the fundamentally good projects with more expensive equipment. And ASICs seem to be the only solution. Then you run the risk of every 2 years, does it become an absolute piece of dog shit? And you got to buy the new one, just like the GPUs. It's tough. It's very tough. We were just a little bit short of our benchmark this year, but not too far under it. We're able to proceed. We're able to stomach it. Obviously, everyone knows pretty much me that does all the fucking work around here. So I do what I can. We've managed to get by. And I hope everyone else is doing the same. Although Bitcoin's at an all-time high, nothing else really is outshining. I mean, you've seen astonishing rises, but somehow none that justify the price of the equipment. Diamonds are down 31% from their peak. De Beers is the largest. Stockpiles since 2008. So Diamond Standard remains an attractive place to park profits. On Ethereum or Hedera, buying that, storing that in the vault in Delaware remains pretty attractive, especially in an inflationary environment. But as for projects, like I said, it's slim pickings. It is bad out there. And we're accumulating some more Litecoin and Bitcoin Cash. These legacy coins are the best places to park it. and we've had a couple equipment failures. And I wish I could be jumping up and down with laughter. But so far, the only ones who are laughing are the equipment manufacturers. So there are some new and innovative devices, but it's none really worth buying. So we've remained in place again, and we're shuffling internally, shifting the strategy, shifting our mined inventory into other inventory, alternative revenue streams, kind of more of the same and more of the same. And that's going to be probably the way we go, is every quarter take a giant swap and put it into the largest one or two highest conviction bets that we are willing to make based on the fundamentals that we do through our research. I don't really know anybody who's outperforming or doing anything. I mean, they'll all say they are because their egos won't allow them to say otherwise. But I have no problem being honest. So, yeah, like I said, large ASICs, that's in the shopping cart. Haven't proceeded to check out yet. Just watching the dynamics carefully. And that's pretty much it, guys. If anyone has any Bitcoin BCH, oh yeah, Bitcoin Cash, hell yeah. We've been parking a lot of extra coin in there. Bitcoin Cash, then the second derivative of that would be Nexo. That's why we keep compiling a lot of Nexo. I happen to like those two best. We'll see what this next ASIC does to the price. If you look at the hash rate, it is a straight line. So these things have been on since at least October, which means that they will be replaced with the new one and the new one, and then the Bitmain. And that's why I say wait for the Bitmain to come out. Just buy that one. And before the halving, then you should have about 6 to 8 months or a year, something like that, before Nexus first halving. So you buy that Bitmain before the first halving, run that for 2-3 years, you're going to crush it, and just pay the juice out of pocket, and have this virgin Nexus, and just stack it up. You can see the rich list continues to grow on the network. I mean, you gotta have like 8-10 billion Nexus just to be on the rich list now. I can't keep up anymore. So basically, anyone who's mining Nexus or buying Nexus is doing it for the long term. That should tell you something. They're not going to run out of money, which means they're not going to run out of innovation, and they're not going to run out of runway. So that's where I'm going to park it up. Again, for those of you listening to the broadcast, the Trillion Capital website, we have the close. Now, again, we have work to deal with a retailer for shelf space, and things like that. So this will be your last chance to get it directly from us, most likely at a good discount, mind you, compared to what it's going to be listed at in the stores. So call me, send me a message on Twitter or Discord, email, what have you. My phone number's on the website. So get in touch with me there, especially for bulk orders. More than flexible to work with those with capital. Yes, you can pay in crypto. You can do whatever you want. But yeah, so that's stepping forward and things like that. And the Quake Core is the only thing I bought in 2 quarters. Is 3 of those little UFO discs at what, $200 Canadian a pop. And that's it. But we're remaining solvent. We will continue. We will not give up. We will not fold. Some of our equipment, mind you, that I'm claiming is a write-off, really only requires maybe $50, $100 in fans or this or that. So it's fixable. But the problem is now fixing that with a $25, $30 fan, it's going to take 2 or 3 months without electricity included to generate $30 worth of Kadena. So why not just buy $30 worth of said coin and leave the fucking thing in the bush? So it's a tough environment right now. Bitcoin ASICs continue to do well. But again, it's paralysis by analysis that I'm thinking, because I've stuck with the strategy for 2 years now. It's hard to diverge away from it because of the uncertainty, or shall we say, certainty that it won't turn out the way you think it's going to turn out. So that's tough. And here we remain in the trench, sharpening our bayonet. I think the big tsunami at some point will come and wipe this all away again, as it always does. And wouldn't that be great? Get rid of the rest of them. But we'll see. I know this is not the happiest New Year broadcast, but I'm sure we all can agree there is an inherent degree of uncertainty in the future of where this goes. So I'm embracing it, rolling with it, accumulating what we can, how we can, and just rolling with the punches. But we won't stop until we absolutely have to. And I think some of this new ASIC development is quite interesting, quite fascinating, especially the Ethereum Classic ASICs. Really neat. But we'll see. Anyway, guys, feel free to reach out on the Twitter, on the Discord, what have you. And I'll be around. But stay mining and stay online. Team up with those around you. Form a team of high-performance individuals that are like-minded, that will see it out to the finish line. And that is going to guarantee your success. Your corporate structure and the team you're in with will determine whether you make it. The hardware selection is the easy part if you have the right team. Yeah, if you have a bunch of lazy people who don't want to do nothing with their life, you're going to fail. But again, why do it alone when you can have a team of specialists? I've said this for years too, and I seem to be the only one doing it. That's fine. Anyway, guys, happy mining. I know we're going to have a great year. There's going to be good times ahead at some point. And let's finish the race in first. Okay, guys. We'll see you.